Final session of the day and final session of the 2 days so far. Been a fantastic couple of days. Thanks everybody for tuning in. I have been told in the break that all of the content from yesterday is already available on demand in the Swapcard app that you are using at the moment. So if you missed something, you can watch that after this session and show to colleagues as well. So that is already there, and then the content from today will be uploaded as soon as we finish today, so you'll be able to access that very shortly afterwards. Right, so final session of the day. This is titled The Real-Time Integration of the Value Chain from Broker to Lender. And with me in the studio, I have Jerry Mulle, who's the UK Managing Director for Ohpen. Welcome, Jerry.
Thank you very much.
And joining us remotely, I don't think anyone's coming from Australia this time, but Derek Garriock, who's the Design and Innovation Director for Experian. Hello, Derek, how are you?
I'm very well, thank you.
Good stuff. Good to see the Experian logo on your wall. Is that at home or are you in the office?
So this is me at home. I've created my own little design studio at home.
Yeah, looks really good. Looks really good. Good use of post-it notes. Who'd have thought an accidental invention like the post-it note would come to dominate as it has? And of course, Steve Cox, who's the Chief Commercial Officer for Fleet Mortgages. Hi, Steve. How are you?
Yeah, very good today. Looking forward to this session.
Good, that's fantastic. Right, so just before we kick off, there is a poll live in Swapcard. I'm just going to draw your attention to it now, and then if we can vote on the poll, and we'll come back to it at the end of the session. So the poll is titled, if you could change one thing about the lender platforms, what would it be? And you've got 5 choices. Real-time communication between lender and your broker platform. Simpler interfaces in lender portals, more clarity on whether cases meet lending policies, speeding up response rates from non-standard enquiries, or a 5th option, all of the above, if you don't know or you're being lazy or you actually think it's all of the above. Yeah, if we could come back, fill that poll in, and we'll come back to that at the end. Right, so on to this session. I think before we go in to discuss any solutions, we need to know what the current challenges are. So I'm going to start with Jerry in the studio, but this broker to lender value chain that we're talking about. Jerry, what do you see as the challenges?
Well, from a technology provider perspective, it's just the complexity and the spaghetti that has built up over the last 20 years. If we today were to design an end-to-end mortgage platform, I don't think we would get anywhere near what we've got at the moment. And so, if you think back, a lot of these systems were developed sort of 20, 25 years ago when to take advantage of all the great data that we now have available. All that they would do would take the static data, take a feed of data, and that would be it. Now, to move those platforms forward, to make sure we've got an interconnected universe where people are opening up their systems and working together, becomes a real challenge, and I think that's what causes the confusion to both on the lender side and on the broker side, that systems don't talk to each other in a consistent way, and brokers are being pushed down the path of using 17 different lender systems. Lenders are trying to work with many different sourcing systems and platforms, and it just becomes an absolute mess. And I think that's the challenge we've got.
Yeah, Steve, I'm going to come to you as a mortgage lender. You're sitting there with trying to interface with as many brokers as you possibly can. What do you see as the major challenge or set of challenges that you face?
I think what we've actually got is 2 sets of the market here. So at Fleet, we are a buy-to-let lender, so we fall under the specialist lending end of the market. I think one of the main challenges would be that specialist lending period, not just at Fleet, it does generally require that human interaction. To talk about cases, it's often more complex circumstances, or it can be certain kinds of business that brokers are not familiar with, meaning they don't transact it every day of the week. So how do we automate, integrate period of sort of front to back solution for specialist lending? I think that's really difficult to do. And I think it will be behind the curve. for mainstream, which is perhaps a little bit more commoditized. Having said that, I think we've seen some almost some positives of COVID. So, for example, independent legal advice now being taken over Zoom or equivalent, stuff like that. So, and EID and verification, that is positive. But specialist lending is behind the curve. There's no question of that. But maybe it's because specialist lending does just needs that human engagement a bit more than mainstream and where the volume lies. So maybe it will never quite get there in the same way as mainstream lending.
Okay, thank you, Steve. Derek, I'm going to come to you. Experian of fingers in pies all over the financial services market. Obviously, enormous CRA data provider. I know about the Data for Good initiative that you guys have got. I mean, you're also a shareholder in a large mortgage brokerage as well, London and Country. There's all sorts of different things Experian do. But so that might be too much of a holistic picture. But what the challenges for you guys? What does it look like?
So I think when we strip it back, ultimately what you've got, and I think that the points from Jerry and Steve were absolutely correct in terms of where the market is currently. My kind of take would be that if you take the journey that we've maybe been on over the last year or two, a lot of organisations have driven digital adoption. And from a customer expectation perspective, there's a higher expectation in all the things that you should be able to do digitally now. And I think that the challenge for the mortgage industry is that if you go back 20 years ago when I was first building digital onboarding capabilities for mortgages in NatWest and RBS, I don't see a fundamental step change in how we're using technology 20 years later. But the capability exists in market today to be in a position where I think that you could probably get 60 to 70% of all mortgage applications straight through processed in under a day, using the data and the technology and such that exists. And I think that the challenge is that, to me, there's an inertia because of the different parties that are involved in the market in terms of nobody wants to go first. And I think that what we're likely to see over the next few years is that the consumer's going to demand that we really start to transform properly from a digital perspective. And that's going to mean that some organisations are going to go first, and they may get a level of competitive advantage from doing so in the first couple of years from that. But I think it will quickly become table stakes in the context of how you process that kind of core rump of customer mortgages. I agree with Steve, though, in the context that what we've typically seen in digital transformation over the last 20 years is the fact that people go for the low-hanging fruit. And you end up in a place where sometimes when you're trying to onboard, and this isn't maybe in mortgages, but in other financial services areas, we have built the single applicant journey, but we haven't built the joint journey. We've built the employed journey, but we've not built the self-employed journey. And where it gets a little bit more complex, we have a tendency to say, well, we're going to accept a level of manual intervention. But I think the reality at the moment is that, particularly for the big lenders, they've got very few levers available for them in this current market to address their cost-income ratio. And as a result of that, I think we're going to see a push towards greater digitisation across the mortgage market over the next few years, because it's all there. It's in our kit bag from an organisation perspective, and it's in other organisations' gift to be in a place where we can really start to deliver a far better customer experience and a broker experience, but also take out an awful lot of costs for lenders from being far more efficient in terms of how we move data from the customer through to the lending decision.
Can I just pick up on Derek's and indeed on Steve's comment earlier? I think so. I've probably been doing digital even longer than Derek, so probably 22 years, and some products are really easy. We've seen the digitalisation of the credit card very early on, simple, easy. You can make it absolutely standard. You can make it very simple. I think the big thing and lesson coming out of COVID is, and we all knew it in the mortgage industry, but people are important. So the humanisation of digital is now becoming essential. So it's not just about taking processes and expecting no human intervention. It's about designing digital that will build the human in when the human wants to be in there. So, you know, we're still driving people to advisors. We're still giving them all the tools. It doesn't have to be straight through in 5 minutes, done and dusted. Some will be. But you're building capabilities around that. So it's looking at a broader play of what we mean by digital transformation. I don't think we're going to follow the same path in the mortgage industry that other products have taken, just because of the importance of the complexity at one end and the advice at the other end. So humanisation is going to be absolutely key as we move forward.
I think we're preaching to an audience
Indeed,
today that believes in humanisation, and Steve makes the point very eloquently as well about that specialist and complex market needing that advice. When Derek was talking, I was reminded of the challenges that TSB faced 3-4 years ago, and I wonder whether, I mean, like this, looking at the large lenders, you know, they'll probably look back at those TSB challenges and the fear that kind of comes from that. That's got to be something that makes them think not once or twice, but 3, 4, 5 times before they start making any major changes. I mean, do we think, Jerry? I mean, you know, that's got to be at the forefront of their minds. Yeah,
absolutely, and you know, I think very few people are going to go with a big bang approach that TSB approach. You know, the phrase now everybody's using is progressive transformation, and that absolutely, you know, you have to work with providers who can take part of that solution, put it in there, integrate it with what you've got, and move forward and remove the whole platform over a period of time. You know, there is no doubt that in terms of getting the return on investment that you need, there are things that mortgage lenders are really hurting with at the moment. If you can replace those and then move over a period of time to replace your others, it's a far less risky process than going with a big bang, which you know, I think few people will go down that route anymore.
Yeah, I'm not sure they have much of a choice at the time.
Indeed,
but it's you know, needs must. Yeah. In a previous session, we had Hitton on from Visionary Finance, and he gave an example of how in the past year they've used 57 different mortgage lenders out of 140 something in the UK, which is great to see. But if even more brokers, lenders are set up with this US influx coming over once again across the pond, then technology is going to be even more important for the broker to actually navigate the number of mortgage processes products out there. Steve, I'll come to you first on this one, but how do we ensure that the broker gets the best possible support from the lender? What kind of steps do you put in place already to do that, and what do you think? What's in your kind of plan?
Well, I think the most important thing all lenders need to do as we sort of emerge from COVID is work with intermediaries the way they choose to work. So, you know, there'll always be that desire and need for face-to-face. It is talk to us, use our BDMs. We've seen a massive increase, which becomes of no surprise whatsoever, in use of live chat. It's gone up 400%. Since COVID hit, which is probably obvious why. It's really, again, I'm coming at this from a specialist lending point of view. Specialist lending is growing. So use the resources that we and other lenders have in that space, be that the BDMs, be that live chat, be that information we have on the website. So that isn't really a technology solution. It's something that's already been there. But where we're very keen to be clear to the market, we will work with our intermediary partners in whatever way they choose. So we're already seeing this as the world opens. So some intermediaries prefer to go back to a BDM visit, be it a team meeting, whatever. Others, unsurprisingly, are saying, do you know what? I don't want to do that. It's time consuming. Can you do a 20-minute update on criteria over Zoom? So that has changed and will probably never reverse. But the information is all there. Our desire to support the market is there, not just for Fleet, but for all specialist lenders. Use the resources that are available. Just talk to us. And if you're not sure about certain sectors of the market, so in our case, we get a lot of questions, queries on perhaps the more complex end of buy-to-let, limited company, HMO, multi-unit blocks. just talk to us. Because for a lot of intermediaries, they've done incredibly high volume over the last 12 months or so. But perhaps a lot of intermediaries are not quite so familiar with the complex ends of the market and don't come across it every day. We are here undoubtedly to support everybody in the way that works for them best.
I'm just going to link a question that's come in from the audience actually on Swapcard with another one here, and come back to Steve and then go over to Derek. It's Michael Hurd again. Hello, Michael. Thanks for sending the question in. You've made the point here. You think the client priority remains getting an application yes rather than anything else. If only it were that simple. We have a growing lending crisis ahead of us that lenders are sweeping under the carpet. Technology can't yet replace an underwriter because the underwriters are mostly erratic with decisions. So who does the programming? So I think, Steve, this is to your point that you still need to be available and there's, to do that personal underwriting in the kind of cases that Michael's talking about there. But then I've got another question here which kind of links in, so how can we enable the availability of real-time data validation whilst the broker and client are working together? Because I mean, it's not simply possible for mortgage lenders to be picking up the phone to every single broker, even though I'm sure they would wish to. So what's Derek? I'm going to come to you on this point, I think. But I'll just reiterate the question again. How can we enable the availability of real-time data validation whilst the broker and client are together? And I think when we say together, we're talking about in a connected way, not physically, obviously.
Yep. So in the current environment, you're obviously in a kind of place where, from a technological kind of infrastructure, we have created, and I'll talk here from a kind of experience perspective, we've created a platform and a capability that we kind of internally refer to as the Open Data Platform. But if you think about it almost as a kind of mortgage data hub, and it's about being in that kind of space where, with the customer's consent, we can pull in, at this point in time, a level of detail from both their credit report and alongside that open banking data to create a really comprehensive view of that individual that probably covers maybe 60 to 80% of a fact find. When we look at different fact finds, there's obviously different levels of information that are gathered. We're also working at the moment with a fintech partner that we have invested in, who are building a capability where we will be able to access payroll information for people that are employed, that will allow us to, from source, gather real-time information around both their gross income, but also what are the deductions and such that they're paying. So if you think about your own pay slip, you might be participating in a health scheme or other things that are deductions that aren't visible. And that's why we always, within the mortgage industry, want to see pay slips or that kind of proof of earnings. And then on the other side, we have, through, again, an open banking type connectivity for self-employed, we are partnering with some organisations that give us access to accountancy platforms that allow us to bring data in to be in a place where we can build up that comprehensive view. So you may have seen in the press a couple of months back that HSBC have been trialling the self-employed solution. They've called out that they've seen a reduction, I think, in terms of manual processing of that self-employed data from, I think, either 40 or 60 minutes down to 10 minutes. So you're in that kind of space where we are in, I wouldn't say isolation, but in certain pockets, we've got everything that you actually need to facilitate what's being asked for. The challenge is now about being in a place where we start to drive adoption. That if I went back to the kind of the earlier question about what's the challenge, what's stopping us, I think what we've seen in the last 18 months is that decisioning within big organisations had to move quickly because we were in a crisis, and that urgency drove us to being in a place where we made decisions quickly and decisively, and we implemented things with an acceptance that maybe there will be a little bit things that maybe go wrong here, but we're going to work on it and we're going to resolve it to get it through. And I think within financial services, we can spend an awful lot of time procrastinating around making a decision to go, rather than being in a place where, if you look at it through an innovation lens, we would always expect there to be learnings and opportunities to improve things as we implement change. And I think that the challenge is that we've got to accept as an industry that, one, we need to go and start to deliver these changes and integrate this kind of real-time data that exists to really improve the process across the board, but accept the fact that it's not going to provide 100% coverage from day one. We might be in a place where you can get 30% straight through processing in the first year or two, and we build together to get to 50%. And then over the next 3 or 4 years, you maybe get to 70% straight through processing. But I think it's this, we as a society have an unrealistic expectation around what technology can do. And I would always kind of liken that to every time a self-driving car crashes, it's headline news around the world. But the reality is that there's something like 1.2 million car crashes a year globally that have a massive level of cost. And for us to have an expectation that when we move to autonomous vehicles in the future, there will be no crashes is just ridiculous. And I think that it's that kind of challenge of we make mistakes. And I think somebody alluded to it in one of the questions that there's inconsistency in terms of how we make decisions today. And just by implementing new technologies doesn't mean that all of a sudden it's going to be perfection. I think there's that teething cycle where we iron things out over a period of time, and we just need to, I think, be more cognizant of what technology and data can do to bring improvements, but also balance our expectations in terms of what will that actually mean in the short and medium term.
Yeah. Good that you've been doing your homework on Sharp Financial Media as well, Derek. You must know that we have a brand called Reward Strategy that focuses on people who work in payroll and reward, and all of those. Good to see that payroll data going straight into source, into Experian, which is another great data source. So that's fantastic information, and maybe one day we won't even need salary slips. Who knows, for mortgage applications? I'm sure Steve would see that as a positive step forward as well. Jerry, have you got anything to add to that point that Derek was just talking on?
Yeah, so we see our role as a lender system provider as being the interface between the lender and the broker systems. And go back to the start of the question. We absolutely need two-way communication. We absolutely need real-time communication. So when a broker and their customer is sitting down, whether it's virtually or face-to-face, that as many of those issues that we can resolve can be resolved. And we've done quite a lot of work with Derek and the team at Experian around how we create that guided journey for the broker. That comes from the lender, that tells them what information they need next, that pulls the information that Derek will provide to our systems, that allows us to interrogate it while we're there in front of the client. And at the simplest level, it may be the client remembers they've got 3 credit cards. They may have cancelled one a couple of weeks before, hasn't come on the bureau report yet. That can be validated and checked there and then while the customers with their advisors, so that the right decision is made and the right process. So for me, yes, there is that great information, and we've got to take that great information. We've got to put it in a timely fashion in front of the people that are having the conversations with the end client. Automate what we can, but as Derek said, that's not going to be 100%, but just make that process simpler and easier, and give certainty. So at the end of that, you want the client walking out of your office with some certainty that they're going to get that access to those funds, and they'll get the house they want.
And essentially, what you're talking about with Ohpen and Experian working together, then this is a system that somebody, say like Steve at Fleet, could pick up, because Steve wants competitive edge when he's going to the broker community, because he wants to make sure that Fleet a front of mind.
Absolutely,
and getting the clarity of their proposition across to the UK's 20,000 mortgage brokers.
I'd love to talk to Steve, but and the important bit is that it's not just about creating a portal that the lender has and everybody having to use that broker. It's about making sure that thing that underpins it, all the services, all the APIs, all the information is available where the broker wants to go to get their information and work through, whether it's one of the broker platforms, whether it is the Fleet's own solution. So that it's the underpinning bit underneath, rather than the focus on digital over the last few years has been pretty screens delivered in a branded way. that doesn't help anybody, and actually it confuses. You know, you can think, I've not been an advisor, but the number of systems I need to log into, to register to understand how they work, to find out people's lending policies in, must be incredibly confusing. So, you know, if we can just create that data and deliver them to the systems that they use, then that's a better way. And I go back to the point I said before about all that string and sellotape and spaghetti that the systems there. We want to go straight into the systems they're using on behalf of our lenders and give and guide those journeys.
I think, Jerry, you must be able to see these questions coming in because you just answered one that came in. You know, the question had been asked: digital transformation in the mortgage industry. It's an age-old topic of discussion. If the panel could summarise in one sentence what's the assistance of digital automation, where is it needed the most? I think you've kind of just answered that question. So I'm going to flip over here to something, to just an issue here. And I'll come to Steve on this point because if I were a lender, I would be constantly, I think, thinking about how can I make my technology better to engage with more brokers. And I think that's a given. And I think you've just been acquired by another business, haven't you, Steve? And we'll come on to that in a second as well, because that brings with it some systems questions as well. But just going back slightly, during the pandemic, what kind of technological advances have we seen during the pandemic, and what kind of things were you doing as a mortgage lender during the pandemic, Steve?
Well, I think if we take one step back from that, some of the challenges here with how specialist lenders can use technology to help everybody in the chain here is actually the different funding models are out there. So when lockdown 1 hit, what you would have found is most specialist lenders who are funded by capital markets and operate in the securitized markets, in other words, are not a bank and don't have access to a balance sheet, we couldn't use AVMs. The reason we couldn't use AVMs was not because we didn't want to do it, nor even our funders didn't want to do it. It's just that the securitized markets will not accept AVMs. So AVMs is a simple bit of technology that would have provided a solution, but the way the funding markets are constructed basically meant they're unacceptable. We couldn't deploy it. So I think, we are now in a very interesting place, having just been acquired by Starling Bank, who are obviously very much led in their entire proposition by tech. So we're a specialist lender. We've now got a parent that sits in that space. How will that come together and improve? It's early days for us, but of course, these are the kind of conversations we're having with our new parent. So that would only seem like good news. But what have we done? It has been basic stuff in specialist lending. So perhaps more mainstream lenders were able to do a little bit more and be a little bit more quick to adapt. However, things like taking independent legal advice over Zoom, being a bit more flexible on how we validate ID, et cetera, those are things we did instantly because we had to react to the crisis. But specialist lenders, and I'm not just talking for Fleet here, we're a little bit more handcuffed than perhaps some of our intermediary partners realised because of capital markets, not the lender itself.
Got you.
I think what came out of that is we need more conversation with those funding models to provide the solution that was obvious but just unable to deploy to help customers and brokers alike.
I'm told time is up in my ear, but I'm going to ignore that because we just asked one more question, if that's all right. So I apologise to my colleagues for completely ignoring the rule, but there's quite a lot going on here. I'm just going to wrap two questions quickly together here. How have digital transformations changed the mortgage experience, and what are the tech and digital transformations on the horizon? Jerry, do you want to take those together?
I'll be really quick. They haven't. We haven't managed to transform the market yet. I'm hoping there'll be a lot more over the next 24, 48 months. Yes, there are interesting tech out there. So I know Derek will talk about open data and how we can use that. And we've just got to win the battle with the consumers to make sure we give them the right value exchange to make that happen. AI has had some bad press. I think if you use it in the right way to support the broker, not in the wrong way, that's good. But reality is, all the tools are out there. There's a lot of platforms out there like ours that are open now and can work across the ecosystem. It's just about doing it now. And the message I've got, I didn't answer the question around what happened in the pandemic, but the lenders I looked after at the time, I think they came out of that pandemic, or are coming out of that pandemic with a view that actually we do need to change things now. So I would expect over the next couple of years we'll see some significant changes.
Great, thank you. Thanks, Jez. I think we could have talked for about an hour, maybe longer on that. That's fantastic stuff. Thank you, Steve. Thank you, Derek, and thank you, Jerry, in the studio. Thanks very much. That was a fantastic conversation, and I hope the audience. I think maybe the key takeaway here is to realise the willingness of the key players involved in this journey that we talk about to make your jobs easier and to make it more simple and straightforward, and for you to be able to do, quite simply, to do more business and to do it better for the consumer. So I think if that message came across, I think that's the right message.